The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting day and another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host here at TFNN. And as I see it, we're at 1900 on the S&P cash. We got up pretty much to the previous high of, what was it, Friday, Thursday, whatever it was, 1906.73. I think we got to 1908 on the cash. So that's pretty close. 2.6 billion shares as volume continues to kind of come in at this time. At least it did a bit yesterday, a bit today. We're looking forward to Apple earnings after the bell, and I think the market's probably, from seeing the bearish tone of many, I think a lot of people will probably try to go short just before the close. So we may see a little continuing pressure out here. I suspect that we will be moving up at least probably for the next coming week. The Fed meeting is tomorrow. My guess is that they won't, as my dad used to say, when you're walking on eggs, son, don't hop. And I think they won't be hopping tomorrow. That'll probably unjustly put a little bit of spring in the step of the bulls. And, of course, we had a wicked move down, and we're going to have a pretty nice bounce higher. I do not see any trade out here that will give me my requisite 20 or 30% if the trade goes exactly as planned. So I am sitting in all cash, more than glad to do so. We're going to go through what I would look for to trigger my next trade, and we'll be looking at confluence levels today. Trying to think what else out here, other than the fact that I forgot to tell you that this show comes to you every day live between 2 and 3 p.m.
The following takes place between 2 p.m. and 3 p.m.
And with just one day, that's the engineers. They think they have to play that part behind it, or it doesn't. I cut it off just because I thought it ran a little long with it. Maybe I'll tag it back onto the end of it and pacify our engineers. But exactly, we've got one day to Armageddon, and it doesn't have anything to do with the FOMC. We'll be talking about that tomorrow. 1900 on the S&P cash as we speak. And like I said, I think we're just going to stumble up. But when we look forward to this week, we've got fund buying starting on Friday. That'll run through about Tuesday or Wednesday of next week. My guess is that like Barnum, I think it was P.T. Barnum said, a sucker never gets an even break, and they will mark this market up right into fund buying and make sure that your 401ks are invested at the absolute highest price possible. As one gentleman once told me on Wall Street, if you're not buying on the top or buying the top, you're not trying. And they weren't kidding. Because, of course, if you think about it, the markets pretty much go up 3/4 of the time. They may not go up a whole lot. And, of course, when they come down very fast. But what they know is that 3/4 of the time, people are not going to be yelling at them for being on the wrong side of the market. The market's going to be going up. So whether or not you make money, because, of course, the last 25% where it takes back 50% of your profits. In fact, there was a thing running around for years, and I probably need to update it. I think I got it somewhere that showed what your returns would have been in the stock market if you would have missed the 10 worst days of the last 15 years. That is just being out, I figured it out, just 2/10 of the time in the market would have, I think it was doubled or tripled your results, your returns over all those years. And, of course, there are those people that can't, so they will always tell you can't time the market. I think you can be, especially with over time, effort and an ability to be flexible, you can time the market and, for the most part, be more right than you're wrong and avoid, more importantly, those 10 days that will sack you either on the downside or the upside. But does it really matter? Just one day away from Armageddon. We'll talk about that tomorrow. And how predictions, actually, I got a book here. I was talking about it in my newsletter last week. Super Forecasting, the Art and Science of Prediction. I've been reading this since last fall. But how do you make good predictions? What are they based on? And why could somebody get a prediction that they made 10 years ago so wrong? And we'll be talking about that tomorrow because mostly the guy that made it, I want to make a piñata just because he was so full of it. But we'll do that tomorrow. Just one day to Armageddon. In the meantime,
then it's all just a little bit of history repeating.
In 1918, soon after the Bolsheviks seized control in the immense troubled Russia in November 1917, moved forward with negotiating peace with the Central Powers, the former Russian state of the Ukraine declares its total independence. Is there anything new in history? Didn't they declare their independence again, only to get attacked by Russia once again? One of the pre-war wars, Russia's most prosperous areas, the vast flat Ukraine, the name that can be translated at the border or borderland, was one of the major wheat-producing regions of Europe, as well as rich with mineral resources, including vast deposits of iron and coal. And, of course, always its neighboring country has desires for the Ukraine. But I'm kind of interested in wheat and grains and beef today. Hopefully, we've got Andy Heck coming on to talk about it later because guess what? It's time to cry for me, Argentina. No, don't cry for me. It's time to cry. Yes, and a biblical sign, farmers and fumigators in Argentina are running out of time as they scramble to control the country's worst plague of locusts in more than half a century. Officials warned on Monday. And yes, it's they've got apparently a huge locust problem. And unclear if there were any other things like frogs and toads wandering around. But don't know. I wonder how maybe something like this, or if it can anymore, actually affect the world's supply of wheat. We see so many countries like Ukraine being kind of encroached on by its creepy kind of pedophile-like neighbor in Russia. But well, what else can you say? That's it. Kind of the. Oh no, I need to go back one more. Almost missed that chart. I wanted to show you this just because I thought it was interesting. Some people had asked me if they thought that I'd seen any real sign that a turnaround was coming in commodities. I said, well, maybe gold, but man, when you look at the Baltic Dry Index, it just makes yet another low each day. This thing hasn't made any sign of a bottom yet to me, and probably connotes the world economy. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Our engineer Al and I think it's Al, we were talking IMing during the break here. If you listen to the bumper at the beginning of the hour that's not played over Tiger TV, you would have heard WKRP in Cincinnati, the song. I just happened to forward it because I found it on YouTube, and they played it for the break, but I sent it to them earlier in the morning. But it's interesting. Anyway, for those people that don't know, I've talked about it before. I lived in Cincinnati for about 8 years and actually lived on the river. I bought a cruiser, big cruiser, and I was gone, 50% of the time. I didn't have time to catch to keep a house clean and everything. So I just lived on my boat when it was too cold. I rented a hotel room downtown, and they called me the mayor of the dock because I was always around and up for a good time for the weekend. Next in the slip next to me, Marge Schott had her boat, and it was called the Double Shot. And she was always down there. And this was with Lou, when Lou Piniella was running the Reds. And she would get drunk and be in her boat and be in no condition to drive home and sometimes pass out. But it would not be uncommon for me to get up or something and hear her talking next to me, and I'd open the door and I'd hear something like this. If anybody knows Marge Schott and her history, but it was always one of the funniest things when I lived down there. It would be this. It'd be, Lou, you gotta find me a man. She talked just like that too. Lou, you gotta find me a man. I'm so lonely. Lou. I think he left the next year, but it was always good. They had a bunch of horrible kids, too, that used to come around and just hit everything they could when they took the boat out. I mean, if there was like 5 corners on the end of some docks to hit on the way out the door and out into the river, they would. But I had a great time living down there. But lots of adventures. And maybe I'll talk about fishing dead bodies out of the river one day. But yeah, there was no difference of that. Oh, I had somebody IM me here. What the it is? Okay. What else do we have going on out here? No. Well, I guess we need to get into this. I got a bunch of people IMing me, and had a question in the den from Andy. Okay, I got okay. Andy has a question on gold, and I have to say that gold probably looked as good as it could have, or it has in probably a year. We've got a little bit farther to go to say that this is just not a bounce in a downtrend that will continue. We're not that much farther up, and we're going to talk about that with confluence levels later in the shoe, in the rest of the shoe. But yeah, I mean, if it looks as good as it has in a year, I've always been reticent. I bought Nugget, got out of it too early. I didn't like the way it was acting, way too whippy for me. But we shall continue on. See my logo in the den? Yes. Hand puppet? I don't know what they're talking about. They've got to be, they can't type very fast in my IM, so I have to say all kinds of stuff. But we'll start looking at some chalk. Now, a lot of people are trying to get short a lot sooner than we can, or should probably, or at least I am. And that is that, you know, we're going to start looking more and more over the next few weeks. I don't know how long this bounce is going to last, but I'm going to tell you that for the most part, what we're going to be looking at is when we get back up to these confluence levels. The best predictor of when to go short with good risk reward is these confluence levels. We talked about them last week a little bit. We're starting to move back up to those levels. I know a lot of people, especially when I look at the data now that I have daily data for people shorting. In fact, I've been talking to Steve Rhodes a little bit about it. We've been kind of conferring. But one of the most interesting things, and I put it in my newsletter yesterday morning, was how many people are shorting the ETFs and how many people are actually shorting the stocks in that ETF. I wasn't really thinking that we had much downside come Friday because guess what? Everybody was all over the ETF and nobody, I mean nobody was shorting any of the stocks in the ETF. That is kind of the tail wagging the dog. I think it's going to be a big signal as we go further and we look to the past to predict the future. But whether it was 2000 and the dot-com blow up or the housing blow up, the thing to really look at on the legs down and the legs up is, you know, unless you're predicting the absolute end of the world, like we'll get in tomorrow, you do get fairly decent moves. And if you've got a market that's moved fairly well with ABC downs, you're going to find that a great deal of them do have confluence levels. That is the 618 to the 382 of the previous Fibonacci relationship. And a lot of times we're showing a cable 1 here. A lot of times you're going to find out that there's gaps that exist and other things that can put together a much more full picture of these confluence levels, but they work very well on the way up and the way down. Originally, I think the first person to really put it in his book was the guy down there in Naples. I'm having a mental blank. I'll think about it. Joe DiNapoli. And he used them without volume, and I think using them with volume gives you a great deal more of a head start. But of course, as we said last week, what you want to do is find these where they're extremely narrow. I like about 1%, maybe 0.75%. If they're a lot wider than that, they tend to be a congestion zone. And whether they break higher or lower, you know that it's kind of going to slow down in the congestion zone. But at the same time, you don't get a real clear back to the wall where you know you can put your stop just a little bit on the other side of it. And normally, you're going to be a very little wrong or a whole lot right. This one's just a good example. It's kind of too thinly traded for me, but Cable One CABO gives you a good example of just how thin. This is a $439 stock, and you've got about a $1 move out here that signals where you would probably want to short this thing if you're thinking of going short. You've got also at the exact same time a nice, wonderful, huge gap. You know, a lot of times you'll spike these things, and then either that day or, and in fact, I'm thinking the market's so bearish now that I'd probably just pull the trigger when these things hit those levels and hope that you get the close back below them, because a lot of times these things are probably not going to give you a lot of movement if we are indeed in the bear market we think we are. We'll be back in a minute. You can give me a call at 877-927-6648. Email me at path@tfnn.com, or be like Andy Heck, my brother from another mother, who posted a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Lou, you gotta help me find him, man. I'm so lonely. Oh boy, her and her little Shotzi was out there pooping all over the field. Ah, those were the days. Oh, those were the days. Living the life of Riley. And yeah, I was working 10, 12 hours a day, flying around the world, only home about half the time. Living like Quincy, if you ever watch that show. He had a restaurant, actually a fantastic restaurant that overlooked the river and all the marina there. And a lot of times I'd make it home about 8 o'clock at night, eat at the diner, have a drinky or two. All I had to do is make sure I didn't fall in the water on the way home. But pretty good. What else is going on out here? Oh, we were looking at confluence levels. Again, I'm starting to put together a model. And as I go through these, I'm starting to get and set up alarms. So if these things do hit them, they will come back to me. Of course, the thing that you really want to look at in setting up confluence levels is that these things are coming off of fairly long-term moves. You don't want confluence levels of a week or two. In fact, I've gone back to the 2-year levels to really see where these things kind of come out. But, you know, in this example from Cal, my Maine Foods, Calms is the symbol out here. You really, you know, you come back down on these things, you set up all these confluence levels, but, you know, these things started back to August 24th of 2015 was the first, where the first confluence level started. The second one was February 2nd, and that's, yeah, of 2015. So these things don't happen in a day, and probably I've tried these things on smaller time frames, and I really like these things when they're like 3 months and 6 months back, because they really show where you should see the make or break points are, and they've worked incredibly well in the past for us in both up and down markets. I can remember, I think it was 2004. I was talking to Tom O'Brien, and I said, you know, I've written this kind of thing. I've gone through it, and I have about 4,000 stocks that I look at every day back then. I think 4,000. It's about 7,000 now. But I said, you know, there's about 400 of these stocks that are a confluence. We were in some downtrend. I think it was in 2004. And I said, market looks, you know, it doesn't look that bad to me down here. And with all these stocks at confluence, I had to go long. And I think we had a huge move out of that. It had to be 2004, maybe been 2005. Can't remember. I now keep, since 2008, I keep a pretty good log of my daily trades and kind of notes. Something I learned when I was learning to fly. You fill out your logbook each day. And I can remember my instructor going, you know, it's you don't think much about it now, but once you write in that book and any notes when you went into that particular airport or anything else, he says a lot of times it'll just bring back you landing at it or seeing at it and really understanding that you've been there before. And it's a good thing to do. And of course, Tony Roberts says a life worth living is worth recording. But since 2008, I've kept pretty good records. And of course, now I have my newsletter every day. I keep all those back issues so I can go back and search them even better. But these really set up fairly nice. Anyway, in Calmine Foods, $51.43 to $52.09 is pretty good. And we've kind of spiked that area. You can see that it's already becoming some level of resistance on the way back up. This is not the fast mover out here, but doing your work now is where it really starts paying off when you want to get short on the way back up and knowing it. Now, we've got some of the bigger stocks out here that have multiple confluence levels. But if I was looking at Caterpillar, I don't know if you're looking for that big of a bounce out here. In fact, we had kind of a 1 or 2 dayer out here, a little bit coming back. But I could see, you know, us moving back up in Caterpillar. What I can't figure out is shorting it here, and that is that the risk reward gets pretty horrible. You normally want to have 3 or 4 or 5 to 1. I like, of course, the bigger the better, of loss to potential move if the stock hits exactly where I think I'm going to going, and I'm going to take my cash there because that was my trading plan to begin with. This one's around that $60 level. This thing only has to get to, what is that, $68.45 to $69.07 to find out that you're going to have some pretty huge resistance there. You've got two gaps to come back up. I know a lot of people think, well, just under $60. Could this make it 69? And the answer is, they get a couple of orders. Everybody says everything's cool. It's not beyond the scope of reason to figure it out. I just couldn't pull the trigger here. Even if the market started turning down, the risk reward would be kind of horrible for Caterpillar for me, knowing that maybe you get a counter, maybe this stock, since it started so much sooner than the rest of the market, headed down, that maybe you have it. But again, setting up the risk reward for your next short is going to be most important. And of course, depending, after you make the initial money off the bottom, the easy cash, it becomes much more problematic that you are going to actually make a profit because, of course, the prizes or surprises are going to be to the downside. When I see big confluence areas like I have in China Mobile that we're showing right now, this one's a little too wide. Again, those are congestions areas, and I think that they will move slowly through. To get the risk reward correct on this one, I need that real narrow one that comes up in the longer term. That would take us to $60.03. Is that right? Yeah, $60.03 to $60.82. And that really sets, or $59.82, excuse me, sets, 21 cents. That gives you a very, very great risk reward because, it pierces it, closes back inside that. Excellent. One of the best indicators I've ever seen. Did I put this in the den? I don't know if I did. Can you discuss Apple earnings? Yes, I can. And but I got to get something else up here. In fact, let's do Apple earnings in the next segment. Because, of course, if I take and talk about Apple, you know what I have to do. And that is we have to start talking about Apple, and we have to start saying, that you're just all out of love for Apple.
I'm all out of love. I'm so lost without.
I've got to get my lighter.
Right. Believing for so long. I'm all out of love. What am I without?
Yes, we'll be back with Apple in the next segment. But, just start thinking about these confluence levels. I posted a link in the den. If you want it to Joe DiNapoli's original work on and his book, I think it's a $180 book. I'll be glad to send it to you. You can email me at path@tfnn.com. Tom covers it for a lot less cash in his book, plus a lot more things. Probably a much better value out there. Plus, Tom puts together the volume with the DiNapoli levels, the confluence levels. So probably a much better deal. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back. Had some emails. Got a few out here. Will oil have to go up for the markets to go up? Couldn't hurt. I don't think so. I think oil could just stabilize around $30 and the market will probably move higher just from being over short. I see far too many people piling on at the lows and continue to see it. Even yesterday, people piling on. It lasts a day, and this is pretty typical for bear markets, and that is everybody just has to pile on every time the S&P goes up 10 points. There's 20 more people piling on. And as I said over the last week, normally when these things break is when the shorts finally give up and they've given all the money that they made in the last move down back. They finally back away. And then guess what? There aren't so many shorts down there. The market can gain some momentum to the downside. And then everybody piles on. And of course, really pushes the market down with some energy. Problem here is, as usual, the watch pot rarely boils. That's one. Kind of boat that I have on Cincinnati River. I had an F cabin Carver cruiser. My bedroom was in the back. Apple. I think you have to look at two things on Apple when we look at the charts, and then we talk about earnings, which are two separate things. And I'm still all out of love for Apple.
I'm all out of love. I'm so lost without you. I know you were.
Yes, the market is all out of love for Apple, but I don't think everybody is. I think they think that they can make up. Okay, now I'll have to play the make up to break up song. Anyway, you had huge energy on the way down. It almost went down and tested the $92. You got a pretty good chance of that getting tested. It was $1.42 above that August 24th low. I'm thinking the thing gets up to maybe 105, 108 area on these earnings. And here's the way I think that the market will react. And they're watching probably one thing. Sales numbers, revenues, probably going to be okay. What they are scared to death of is that margin number slipping. Because if it just slips a couple of points, it's probably like losing $500 million worth of sales. So, I mean, at 69, I think they came in at 67% gross margins last time. That's what everybody on the street's going to be looking at. If they keep their 67% margin, guess what? A bunch of people are going to, at least Wall Street yokels, are going to, street guys are going to plow back into this. And it wouldn't be a problem to get it up to 105, 108. That would set up a beautiful ABC on the way down. And I think more than likely that is what's going to happen. Again, all these earnings, in fact, the ones out today, let me bring them up out here. I mean, for the most part, let me find it out here. Because I had them all earlier. I was posting them in the Tiger's Den out here. And that is, let's look at the earnings just from last night and today. Amgen, flat. Coach, up 3%. FCX, up 6%. J&J, up 4%. Procter & Gamble, up 2%. Polaris, Polaris was the loser out here, and it was down 7%. Sprint, up 21%, up 55 cents. Sanmina, up almost 10%, up $1.68. And we had a big winner out here we haven't even talked about. TEX, they're getting bought out. They're up 34%, although I think that they were up earlier almost 50%. But a big move in TEX. Maybe we'll get a chance to look at that before the end. But probably it's already down the river already. Probably not a lot to do with that. Anyway, when we look at Apple, you just have to look at the 382.5 retracement. That's normally what you're going to get when you see so much more energy on the way down than on the way up. In fact, I'll zoom in here. I mean, you had some very strong energy for the first time, almost 20% more, maybe about 25% more energy on the way down than on the way up. And you just can't get past that. There are going to be a lot of people that want to get out of this thing on any pop, and that makes your limit probably about 105 to 108. Do I think it gets all there all in one day? The answer is no. I think maybe we pop back in 102, 103. You got some shorts. They'll slowly cover. And then you get into this almost, I want to say, now everybody gets mad at me when I say retarded, but it is this kind of horrible loop where everybody shorts it. It doesn't go down for a few days, so they cover, and it goes a little higher, and they short, and it goes a little higher, and they short. And that's where, when they give up, is normally the time, and you really have to kind of watch it. But generally, the big signal on this, on where it's going to start its next ABC down, it's going to be, you're going to see the volume dramatically drop, and that volume that drops is probably not people buying it long. It is the shorts giving up. And like I said, when they give up, I suspect that between 105 and 108, you'll be setting up your next ABC down. And what would that be? $93 to 108, so $15. That would take you down to what is that? Maybe down to that $90. You pierce that $92 level from August 24th. So as I'm gaming it and thinking about it, although I'm not playing it, that would be the most likely scenario that I can see. That you can massage the numbers. They've got $100 billion in cash laying around. They can move that around. They can extend. If they were going to be short on revenue, they could hold out a couple of days. That's why I'm going to say that what we're really looking for, and it may not come out until the conference call, but every analyst is going to be watching the margin and the margins on the iPhones to see what they were. Did they have to give up a great deal to go into China and get that business? Because, of course, no one goes to China without losing a leg or an arm. They pretty much, they're about as good as the mob in making sure that the protection money is paid. They get a big hunk, and they also one day will be able to steal all your business by copying everything you do. So, could they have had a good Christmas season with China? It could be okay. It didn't have to do that great, just with the move down in the guidance that most of the analysts gave. So yeah, just look for a pop. I think you get it. I don't think it's going to be one of these things where we go back When we're dancing around 100, we go to 102 or 103. It goes up to 105 over the next week, maybe up to 108. And you see the volume drop out. And that's probably where you're going to see the next leg down if numbers are not as strong as a lot of people say that they're going to be. You can give me a call at 877-927-6648. Of course, Tuesday is back. Andy Heck, I guess, is back from his well-traveled stuff. So we're going to have a ton of extra programming today. Another 3 hours after me. And maybe, I guess he's on at Tuesday. He's going to be in the 4 o'clock hour. So we will think about that. Anyway, be back in just a few minutes. Have plenty of time to email me or call me.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Of course, after the bell, we've got Apple, we've got Capital One, Stryker Corporation. I'm wondering if they're going to do about like Intuitive Surgical did. United States Steel, and VMware. VMware is going to be very interesting. I have no idea what it's doing. And of course, in the morning, we've got Boeing, St. Jude Medical, Tupperware, United Technologies, and after the bell tomorrow night, Broadcom, Cirrus, Core Laboratories, Discover Financial, Facebook, Hanesbrand, InnovaSense, Juniper Networks, Las Vegas Sands, SanDisk, Texas Instruments, Tractor Supply, United Rentals, and Vertex Pharmaceuticals. So it'll be a big night with Apple tonight. and it will be kind of a big night with a lot more stocks tomorrow night and in the morning. So got a lot of stuff, a lot of moving pieces. Fed meeting tomorrow at 2. I think we're probably going to have a lot better idea what's happening out here. But again, a lot of these analysts were burying these move downs and dropping the expectations for stocks into Christmas. Why no one was paying attention and everybody was opening presents. The spineless weasels are pretty good at moving those things down and then saying, oh, everybody beat, everybody beat. And of course, their job, of course, is to just put disinformation out there for the masses. I, of course, know that they continue to move the limbo bar up, not down. They tend to, in the bull part of the market, continue to move it up. And then when it's supposed to come down, they kind of hide the fact that they are moving it back up while nobody is looking. Anyway, what else do we have? A few more stocks out here for confluence levels. I know we haven't really tackled many of these, but some of these things are looking fairly decent. We were asking whether or not commodities could have a bounce, and they certainly could. And this would be nothing more than a bounce in a down market. And you could get fairly decent move out of these commodities. Compass Minerals, this is a pretty good one. What I dislike about these stocks, of course, is every one of them had extensively stronger energy on this last leg down. On this one, you've got a very nice confluence level that comes in at about $79.92 to $80.15. These may be good ones for you to start looking at and figuring out. I can kind of just see them now. I've looked at them for long enough that I can kind of, that one's going to be probably pretty close. I'm working on writing a scanner for this. Hopefully I'll have it done before the market collapses. But look at it. Coca-Cola, another one out here. This shows kind of the opposite. As we talked with one of the callers the other day, you tend to see these stocks really start to ramp. If you had to go go long out here, this one actually shows you just how great some of these things work. And I'm not cherry picking. These things do work very well. This one has an area that if you could get back in that 162.80 to 162.45 level is just about perfect on Coca-Cola bottling. And, you know, it kind of came down with the rest of the market. But, you know, a lot of the people are going to be running into these Coca-Colas, the alcohol stocks, the tobacco stocks, the Procter & Gamble's of the world to find a haven. And why energy was okay on this one, this is one of the few stocks out here where energy actually was less on this leg down than on the previous leg up. So just know that, you know, these companies, especially the safety companies, will probably be finding a lot of people running to them for funds that have to be invested in stocks. In the meantime, sell when you can, not when you have to. Cover when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.